Hi everybody, I hope you're having a great day. Today we're going to talk about ETFs. So as a beginner investor, you've heard the term ETF, but what does that mean and what are some possible good ones for you to start looking at to put possibly in your portfolio? Well, ETFs are basically a basket of stocks. So they are an exchange traded fund. That's what it stands for. An E, exchange, T, traded, and F for fund. So ETF stands for an exchange traded fund. And basically, it's like a basket of stocks. So in your stock backs, you have one Easter basket. In that Easter basket, or whatever, eggs, you have a stock of, say, energy, oil, you have tech stocks, you have health stocks, you have food stocks, you have beverage stocks, you have a variety of stocks. Instead of just having like one or two things, you have different kinds of stocks in one basket. So when you buy an ETF, you are getting like a small slice of the stock market with one stock. And ETF is similar to a mutual fund, but an ETF will trade like an individual stock. And basically, it provides exposure to the broad market with one stock. And it's generally supposed to be less risk than owning individual stocks. And Warren Buffett, as you know, he's one of the top worldwide famous investors, and Jack Bogle both recommend ETFs. And Warren Buffett further recommended that his wife invests in short-term government bonds and 90% in very low-cost S&P 500 index funds. And Warren Buffett also said Vanguard fund. So he actually named the ETF fund you might want to take a look at, Vanguard fund. And so there you go. And basically, I will give you a couple of ETFs and see which ones that I kind of are looking into and see which ones you find. So how they work, what is an ETF and how does it work? So I told you it's a basket of funds, it trades like a stock, and it lowers your risk generally. So also, out of the 70 U.S. listed ETFs that they have, some contains dividends, which is very nice. You can get a little cash back with that. So what is the objective of ETF? They target companies that increase their dividend payouts for a number of years, which is very, very nice. So in that ETF basket, you have a lot of money coming back into that. So that's very nice. And also they look at how the dividends and the ETFs perform, because you want history and long-term track record. And also, is the ETFs analyzed yield? So what is dividends? ETFs analyze yield. That's something to calculate and see if you like that. Or you don't have to do that, because the stock ETF advisors and managers will look at that for you. And then how much does the dividend ETF cost? So you look at the ratio online and look at the perspective. So here's a couple for you to look at, and these in particular are analysts are saying are good to consider in 2020. And so, every time that someone, time and date and conditions in the world. So you always have to look like when you're going to be entering into the stock market, what's happening in the world, how are things changing. And so do always do your research, and always go to your licensed financial broker. This is just research, entertainment channel to get you excited about compound money. So we already said Warren Buffett said and recommended to his wife the Vanguard stock. So here is Vanguard Total Stock Market ETF. Ticker symbol V is in victory, T is in Tom, I is in independent. So VTI. And it has approximately 148 billion in assets and 1.8% annualized yield. And then there's we're going by the biggest numbers, basically. Number 2, there's another Vanguard. There's a couple Vanguards, so see which one you like if that's something you would like to explore. Vanguard Dividend Appreciation ETF. So that one is V as in Vanguard, I is in independent, and G is in good, VIG. And they have approximately 43.7 billion in assets and 1.8% annualized yield. And then there, number 3, there's another Vanguard. It's Vanguard High Dividend Yield, which could be interesting. I like high dividends, but also sometimes high dividends could be riskier stocks. So you have to weigh those things out yourself before you decide what's right for you. And remember, stock is a risk. Stocks go up, they go down. So Vanguard High Dividend Yield, that's ETF, is V as in Vanguard, Y as in Yummy, and M as in Mighty or Merlin. And that's 26 billion in assets and 3.7% annualized yield, which is nice. And then number 4, the SPDR S&P Dividend ETF. That's kind of a handful. So let's do it again. SPDR S&P Dividend ETF, and the ticker symbol is S as in Sam, D as in dog, Y as in Euro, and they have about 15 billion in assets, and the annualized yield is around 3.1%. And then there is number 5, iShares Select Dividend. iShares Select Dividend ETF, DVY. D as in dog, V as in very, Y as in Euro. They have around 12 billion in assets, and the annualized yield is 4.4%. That is the highest one on the list, the 4.4. And also we're going to review right now today's top ETFs. When we go to the Yahoo Finance or go to see who the top ones they're listing today as of July 21st, 2020. So Wisdom Tree US ESG Fund, that is, the price is around 28.83, and they're saying that is the top one, and it says the symbol is EXT. E is an excellent, X is an X-ray, T is in Tom. Then, and we're just going down the list here, see how they stack up it just lists the top ETFs. Invesco S&P 500 Equal Weight Energy ETF, and that ticker symbol is RYE. Invesco DWA Energy Momentum ETF, P as in pick, it's like Pixie, PXI. Vanguard Energy Index Fund ETF shares, Vanguard Energy Index, so that's V as in Victory, D as in Dog, E as in Edward. And Vanguard is one of the ones that Warren Buffett suggests to his wife, the Vanguard group. But there's a couple Vanguard, so do your research and see what's interesting and excites you if you're going to do an ETF. And Fidelity MSCI Energy Index ETF, so that's FENY, FENY ticker symbol. John Hancock Multi-Factor Energy ETF, ticker symbol JHME. J is in John, H is in House, M is in Mighty, E is in Edward. Energy Select Sector SPDR Fund, that's ticker symbol XLE. And then iShares US Energy ETF, I is in independent, Y is in Euro, and E. So IYE, iShares. iShares, and there's a lot of different ETFs, so make sure you're looking to see, do I want iShares in energy, do I want iShares Global Energy, iShares Global Energy, there's Vanguard Energy Fund, there's several of the same name funds, so do your due diligence, do your research, do your education, see which one makes sense for you before you go on the diving board and jump into the pool of money and see which one makes sense for you before you choose it. So, and the list goes on because there's a lot of ETFs, and I'm just going to round out with Warren Buffett's advice. The Vanguard 500 Index Fund, Admiral Shares, VFIAX. And remember, these ETFs do charge a small annual expense ratio little fee, and some of them are like 0.04%, so approximately $4 on a $10,000 investment. So they do have a little annual fee. So it's if you and most of it that's why it pays to be rich, because in a $50,000 portfolio, the annual fee would be $20. So it's no big deal to someone that has like big bank, but when you have little money, those fees can add up. So just see about the fees if you're comfortable with that or not. And in the Vanguard 500 index fund, Admiral shares, V is in victory, F is in Frank, I is in independent, A is in awesome, X is in X-ray. This large fund includes Microsoft, Apple, Alphabet, which is the Google, and those are some of the FANG stocks. And the FANG stocks are the ones that are taking a bite out of the market, that are the leaders in the board, and also passing the S&P 500. So like your Amazons, your Apples, your Google, your Teslas are just on fire. But they, so it's nice to have, like, if you can't afford, like, the Microsofts right now, because we're Mogul girls, we're clever girls, we're working on it. Can't afford the Alphabet, which is over like 1,200. The Microsofts are pretty reasonable, around like 211, 212. Apple, which is almost 400. Google. So it's nice that if you buy one of their stocks, you get all those in there. So that could be a great strategy. And on that one, the Vanguard, it does have a minimum investment of $3,000. So you have to see what's right for you, what makes sense for you. And so those are very exciting. Very, very exciting. And it's nice to see that worldwide famous investors like Warren Buffett, who is a billionaire, who is a stock investor, who has the books that I told you, and very shrewd, I believe, very, very frugal and penny smart guy, likes the index funds and suggests to his wife, and what does that say? It means women and those of us men out there who don't have that finance education and training and wasn't raised with a mom or a dad or a mentor to teach us about stocks and investing and IRA and 401k and how to do your capital gains to avoid taxes. To your earned income is taxed the most. Your paychecks, anything where you get a paycheck is taxed the most. So you do want to find ways to be taxed the least with your earnings and your income. So that's why business owners with those corporations, they, you see like Warren Buffett pays less taxes than his secretary. So you want to find ways to increase your income, to grow your money, to get that compound interest and make your money work for you. So remember, this is for entertainment purposes only. Stocks go up, goes down. Your decision to buy a stock is your own decision. I'm not responsible for any loss that you have. Please seek a financial a licensed broker, and always educate and learn, because there are people that do make money. There are people that do lose money. But if you educate yourself, you learn, you study, and you learn the basics, you read those books that I told you, you read about those investors, you study and you learn, there are people that have success. I just had success with a stock. I just made over a couple $100 with it. Very happy. My stocks are growing. I did a startup, and everyone goes, oh, startups, so many people lose money and blah, blah, blah. And you have to hold it for so long. There's no exit. You'll never see your money back. It could be 10, 15, 20 years. And then mine, within under a year and a half, that's 1 year and a half, under 2 years, 200% profit, 200% profit. So you can listen to people that say they lost money in the stock market. You can listen to everyone, but you do what's right for you. Be wise, be smart, be clever, and most of all, be a mogul girl and mogul guy, and have a great day. Thanks a lot for listening. Like, subscribe, get your free stock with the link below, and support me with just, simply giving me a subscribe on my YouTube or a nice 5-star review. Tell people about it. Let's learn together. Let's win, and let's get rich.